Have about a 468 pip trade running on gold, and I took this about 3 days ago when interest rates came out. So let's go ahead and do an entire technical breakdown. Start off with the weekly time frame. We marked off the current resistance, which is at 1834.400, and then also the weekly support, which is right into that 1755 level. So the reason why these are important levels is because, as you can see, every time price taps into it, there's some sort of volume that kicks in. Every time price taps into this 1834.400 area, there's a bearish pressure, and that's why as price was approaching this level this week, we anticipated that there would be some sort of a bearish pressure, and we could look for potential sell opportunities if we did not close above 1834. Same thing, as price pushes down to 1755, we start to see some bullish pressure to the upside as candles fail to close below this and continue down. And same thing here when price tapped into this and then pushed right back up to 1834. Now let's drop down to the daily time frame. We marked off that area from the weekly time frame, which holds as support at the moment. I'm going to remove this zone just so when we drop down to lower time frames, you guys will clearly see the zones that we were seeing at that time. The next area that I'm going to mark off on the daily time frame is going to be this resistance right here at 1848. So that's the daily resistance that we were seeing at the moment that day when we were looking at the charts, and then finally when price pushed down, we were able to take a trade. So here we weren't able to take a sell right off the bat because price was still respecting a bullish structure to the upside. So just going back to the basics real quick, a bullish structure tends to continue like this as it creates higher highs and higher lows, and the structure is only broken when previous lows are broken here. So this is when a bullish structure turns into a bearish structure and continues down. So for that reason, we were not able to take a sell right off the bat. But when price pushed down and broke the previous lows, that's when we anticipated that sells were now valid as it pushed down and then continued pushing. When we drop down to the 4-hour time frame, we start to see that there's a ton of consolidation, confirming that we're not going to be taking a trade between this 1848 and 1834 level. Now we drop down to the 1-hour time frame, and what we see is those bottom wicks that were forming on the 4-hour time frame are actually candle supports that are being formed on the hourly. So what we needed to see was a candle close below the zones, and we get that twice. So 2 hours before the interest rate news comes out, we see those candles closing. Now we need to see some form of break and retest, and then a continuation down. So we drop down to the 30-minute time frame. This is when the interest rates came out. Price pushed up a little bit as we maintain the interest rates, but we are still tapering on track to go ahead and increase the interest rates in March. And when the press conference came out and Jerome Powell started answering questions, we start to see this entire meltdown happening. Because this is a high impact fundamental coming out, I dropped down to the 5-minute time frame to confirm my entry. And on the 5-minute time frame, what we saw was a break and retest. So I placed my stop loss right above this 5-minute top wick, which is pretty tight for gold. So this was about a 26 pip stop loss continuing down. And as you can see from entry until now, it's been a completely risk-free trade as we're continuing down. So now the next goal is going off the weekly time frame that now we're starting to break these minor support areas that we're forming here, and we're pushing down and tapping into next support areas. Once we clear below this, there's really nothing stopping us from continuing all the way down to 1755. So this trade, which is currently running for about 17-to-1 risk to reward, can easily be turned into almost 27-to-1 risk to reward if we can break below these next support areas and continue to fill this wick to the left all the way down to 1755.